The amount of outstanding credit card debt in the US economy is now north of $1 trillion, up from like a previous high of 900 billion. So it's a chart that I saw this morning. Obviously, inflation has been really high for the past few years, although it's starting to subside. I think Jamie Dimon, the CEO of JP Morgan Chase, had said that they're seeing a bifurcation in their client base where on the lower income side, people have largely exhausted all the cash that they saved during COVID from all the stimulus. On the higher income side, people are still in good shape. So I think you're starting to see macro indicators of potential distress on the lower end of the market that would correlate to where a lot of the renters are. And when we see something like, all right, starting to see an uptick in card payments, that may also correlate to potential tenant distress.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 415. If you're looking to gain insight into the current state of renting and tenant habits, it helps to have a lot of quality data at your disposal. My guest today has access to that type of data through his tech company that helps property owners manage tens of thousands of rental units across the United States, including hundreds of millions in annual rent payments. Vikas Gupta is the CEO of Azibo, an online platform that provides an easy way to collect rent, manage finances, and find tenants. Vikas is going to share insight from Azibo's data findings, the lingering gaps he sees in data collection for commercial real estate, and his point of view on the real estate market. Vikas, welcome to the show.
Thanks for having me. I'm glad to be here.
Tell us a little bit about yourself first, and just kind of set the help us track like how you have come to be in possession of like really good quality data that we can learn from.
I'm the CEO of Azibo. Company was founded in 2018. I actually joined in 2021. But prior to Azibo, I've spent almost my entire career in technology across a variety of different spaces, but somehow I always come back to data. Prior to Azibo, I'd been a founder. I'd run product, but for different companies. But for 6 years, I worked at an actual data company that sold that aggregated and sold high quality location data for a variety of different use cases. And then before that, I started my tech career at LoopNet.com prior to their acquisition by CoStar in the commercial real estate space. And they obviously had a lot of data, being at the time the leading marketplace for commercial real estate. And so I guess I've spent a long time doing things around data, technology. And I started my career in technology and real estate, and here I am in real estate again. In terms of how we get the data at Azibo, so we offer an end-to-end solution for independent property owners. So, we're not serving the big REITs, the institutional invitation homes of the world, but ours are the bulk of the real estate investors in the United States, the folks who have 1, 10, 50, 100 units and are self-managing and doing it themselves. And we try and help them run their businesses more effectively. That's tenant applications, tenant screening, leases, e-sign, document management, online digital rent payments, banking, accounting, maintenance, tenant communications, with a whole host of value-added services. Just a quick plug before I go into the rest of the content. We don't charge software fees, so it's completely free for the landlord, for the owner, so come check us out. But getting back to the data as an artifact of all of that, right, of having lease information, of processing rent payments, of enabling people to do their accounting, we can aggregate in a privacy safe way rich insights and data on what's going on. And we can do it in a segment of the market that is typically lacking for data, right? A lot of the data that is typically produced about rental housing is coming out of the software platforms or coming out of the companies that either serve or manage tens of thousands of units, and their units are large multifamily apartment buildings, not the single family home, the duplex, the triplex.
Let's relate that to LoopNet, because you mentioned that you were doing this at LoopNet for a while, because that's exactly what you're talking about. LoopNet, CoStar, which bought LoopNet, has a lot of quality data on larger apartment communities, larger commercial properties, but I don't even know if they list anything that's under 4 units. So there's a lot of data missing from CoStar. And I want to get into that. But I want to go back to your time at LoopNet, what you were doing there and what kind of data they were collecting and what you were learning from the data at LoopNet.
So I was at LoopNet from 2006 to 2009.
Very interesting time to be at LoopNet.
Very interesting time to be at LoopNet. And they were a marketplace, right? And one of the first sort of digital marketplaces for that segment. So whether it was an apartment building or a strip mall or an industrial building or anything sort of in the commercial side of the world that was traditionally run in a very manual, offline, broker to broker, relationship driven, they built a marketplace. So you could go list properties for sale. You could also list properties for lease, although the for sale side was much more active at the time. Nothing I'm saying is a comment on how things are today, because my knowledge ended 14 years ago. But at the time, the for sale side was much more robust, and you could list properties for sale. You could find properties to buy and interact, and sort of as an artifact of that, right? Because a listing is it's pictures, it's details about the building. It's, if it's a commercial space, a strip mall.
Was LoopNet more of just a listing service at that time, or were they aggregating data as well?
So they were aggregating data as an artifact of the listing service, right? Because on the listing, you're getting the size of the property, the type of the property, the tenants, the type of the tenants. You're getting self-reported income, rents, all the information that, right, if you were looking for a property, you would want. Like that's like one of the nice sort of artifacts of a listings business is you get a lot of information about the properties. And so they had all of that, and they made it available as comps. There was a comps product. They started to productize it and roll out like more research-driven products. But it was all sort of the data exhaust, for lack of a better word, of the listings. Because every time someone puts in a listing or updates a listing, right, it's all that information from the listing. And then you aggregate that across tens of thousands or hundreds of thousands of listings. You get very rich data about the state of a market. And then you can drill down into specific geographies or specific property types or sub-property types and really, slice and dice the data.
Do you have any takeaways from your time there as far as the data you were seeing and what it was showing you?
On the real estate side, not as much, unfortunately, that I can remember, but there was a subsidiary that they owned called bizbuysell.com, which still exists and is still a large business for sale marketplace. So laundromats, restaurants, car washes, et cetera, Main Street retail and services type businesses. And I was much more involved in the data products there. And we produced a quarterly report that I think they still do about business for sale comps. And before that, like you couldn't really get data on like what is the average multiple for a laundromat for sale in Philadelphia. Like that was a data product that didn't really exist prior to what Biz by Sell was doing. And so that was super interesting because you learned that, hey, laundromats at the time were going for 3 to 5 EBITDA. That sounds like a really good deal, especially if there's some growth opportunities there. Restaurants went for a little bit lower. And then, we produced that by MSA for like the top 50 MSAs and pumped that out quarterly. And it got a lot of attention and got a lot of coverage because it was data that wasn't accessible before. So it was, that really, I think because in that one, I helped productize it, build it and distribute it. That really sort of opened my eyes to the ability for, a technology product to aggregate data that historically hasn't been accessible just as a byproduct of offering the service and then turning it into something useful, providing insights that people didn't have before.
Let's talk about that data collection that you brought to Azibo and kind of what you're collecting. I mean, you kind of went through the list of everything Azibo does, but what you're learning from the information you're collecting, what are some of the things that stand out to you now in this time period? I
mean, I think one thing that's been really interesting for us to look at, and we look at internally just for the health of the system and for the health of our landlords is like on-time rent payments, right? Like for anyone who owns real estate, but especially if you're in our market segment, right, the independent landlord, like that rent needs to come in because you got bills going out that next month, right? And that rent is funding that property, funding that mortgage. And so getting paid on time is critically important. The big on-time rental payment indices historically, again, have been MFR, right? Because those are the folks who have access to the data. There hasn't really been a lot of like what are on-time rent payments for SFR. And so I think the last data that I saw on MFR on-time rent payments was, 82, 83% up from the 70s at sort of the worst of the pandemic. And on our side, like what we're seeing is 88, 89% on-time rent payments. And so I've seen one other data statistic on SFR, which was like in the 82, 83% range as well. So that then sort of like starts us asking questions. All right, like why are we seeing 6 points better than the one other SFR benchmark that I have and the sort of standard MFR benchmarks? And that sort of starts having us like ask questions around, all right, it doesn't like we have enough units on platform where it doesn't necessarily seem like it's idiosyncratic. Like our units are spread across the country. We have rents ranging from sub $1,000 all the way to north of $5,000, but the average rent is $1,400. So that's all right. That's not out of whack. So it seems like fairly indicative. And then you sort of get into, okay, is that because of the service we provide? Is that because of something else? To be answered, like I wish I knew the answer, but that like it's just interesting, right?
It's a big difference. You're mentioning a couple benchmarks that I want to make sure we understand. MFR and SFR, these are multifamily rentals and single family rentals. Where do you find these benchmarks? Where do you find this data that you're referencing?
So the SFR one, I think it's a company called Chandan, Chandan. They're a research outfit out of New York. They publish an SFR benchmark. And then the MFR one, I think it was from like the National Association of Multifamily Housing or National Apartments Council, or I can look it up and get back to you.
I'm just wondering, like, what's the quality? Because the quality of your data is it's real time. You're seeing this collection happening in real time. What's the quality of their data? Is it coming from just like self-reporting from other operators, or do they have access to credit card companies? I mean, how do they know? How are they able to come up with this data?
Yeah, so I think the MFR benchmark is coming out of institutional level property management software. So also very high quality data.
So like if you have an AppFolio or Yardi,
yeah,
that's reporting whether rents are being paid. Is it okay? So this is where data gets interesting. Is it being reported because people are paying their rent online through those portals like the AppFolio or the Yardi? Because I know my management company uses AppFolio, but it may not always be directly paid through the AppFolio system. So it might be entered later, but not logged correctly, or maybe not logged properly. So is there any of that going on where the data might be a little off because of the way it's reported?
Yeah, I mean, definitely, I think, there could be errors if someone is manually logging payments and then they just log it the date that they log it as opposed to backdating the invoice to when it was actually received. I think that can certainly throw off some of the data. But I know for us, we look at only what's been digitally collected. And then if we do look at what hasn't been paid and we sort of back some of that out, like if someone hasn't paid for 2 months, then we remove them from like the active database under the assumption that that's no longer an active rent collection, transaction, which I think is fairly standard practice. But so there's potential for some of that stuff going on because you do have to do some of that data cleaning. But I think, I don't think anyone's trying to fudge the numbers, and certainly like if you are trying to fudge the numbers, you'd probably want to fudge them up. And so 82% is still 82%.
It's not the fudging of the numbers. It's the quality of the data entry, like who's entering it. And because there's always a lot of nuances on the ground as to what's going on. But it's interesting though, if you're seeing 89, you said around 89%, which still indicates an 11% delinquency on the part of people paying rent. So that to me seems pretty high.
Well, it's not non-payment, it's just paid late.
So it could be a couple of days late, you mean?
Yeah. So for us, and I think for the other benchmarks, like paid on time is within the grace period. not necessarily the first, just within whatever the grace period is on the lease. And then paid late is, after the grace period ends. So typically that would incur a late fee. It looked like I was surprised too. Like, I'm like, wow. Like when I first saw R89, I was like, yeah, that doesn't seem good. Is it good? And I asked my question, is it good? And then I started looking around. I'm like, wait, it is actually quite good. This is surprising. But I guess, like that's the state of the market.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Speaking of the state of the market, let's talk about other indicators in the market. Right as we record this, it's mid-November 2023. We know that interest rates are super high. Rents have gotten super high. There's a lot of people complaining about higher rents. What can you tell us about the cost of rent? Is it too high? What are you seeing? Are people able to afford it? Does it keep going up? What kind of data do you have on that?
One thing that we can see on the rent collection side is we offer both the ability for renters to pay via ACH or pay via card. And we've started to see an increase in the percentage of renters who are paying their rent on card. It's not, a massive transformation, but an
increase in paying their rent through their credit card?
Yeah.
And what would that indicate to you? Like they don't have the funds on hand?
So that's potentially a sign of distress, right? Among segments of people who need, don't quite have the cash on hand when rent is due. And so they put it on their card. Now, if you have the float, right, until your statement hits and then until the due date of that statement. So, right, like you can put it on the card for a small fee and then potentially pay it all off before you accrue any interest or debt. That part we don't have insight to, right, because we don't have access to credit card balances. But I do think that's a potential sign for distress in the renter market, which would correlate to some other macro indicators. Like I think the amount of outstanding credit card debt in the U.S. economy is now, north of $1 trillion, up from like a previous high of 900 billion. So it's a chart that I saw this morning. Obviously, inflation has been really high for the past few years, although it's starting to subside. Right. I think Jamie Dimon at the CEO of JP Morgan Chase had said that they're seeing a bifurcation in their client base, where on the lower income side, people have largely exhausted all the cash that they saved during COVID from all the stimulus. On the higher income side, people are still in good shape. So I think you're starting to see macro indicators of potential distress on the lower end of the market that would correlate to, where a lot of the renters are. And when we see something like, all right, starting to see an uptick in card payments, that may also correlate to potential tenant distress. So I think, is the question, is the rent too high? I think too high, like that. What is too high, right? Ultimately, people need to live somewhere. Ideally, people can afford to pay. We do have a housing shortage in general. Most places, we haven't built enough. That's led to some of the increasing rents. So I think there are some things that policy folks should be looking at in order to make development a bit easier and build more housing and increase supply. But I think in general, without like wading into overly political or potentially challenging territory from normative comments.
Let's go there for a second, because policy really does drive construction, and because it affects the flow of money. And if you were to kind of point to if you were to talking to a policy person who was thinking of coming up with some sort of federal grant or state grant, what data would you point them to that you have through Azibo to say, well, here's really what you should be looking at? Like, what is some of the data that we should be aware of, and especially on a policy level?
If you ask the question, are rents too high, right? Like, rents have gone up in most places over the past 3 to 5 years. Now they're starting to come down in certain cities, but they're still, even in those cities where it's come down, like, they're still higher than they were 4 to 5 years ago, and they're significantly higher. And so then if you just sort of look at economics 101, you have, all right, the rents are going up, like there's a supply demand imbalance. And how do you cure that? Like, you can either depress demand, which doesn't quite work because people need to live somewhere, or you increase supply. And so then what are the barriers to supply? Now, interest rates are going up, so that makes it a bit more difficult to bring supply online. But there are a lot of, regulatory things that also make it very expensive to build. And I live in California, I live in Los Angeles. There are a lot of regulatory things in this state, in this city, that make it very hard to build, from single family only zoning to minimum parking requirements to minimum setbacks to double stair access required to elevate. Like, there's all sorts of, and they're all been put in for good, there's all reasons to have them, but there's a trade-off for all of those reasons. And one of the trade-offs is that it makes it more expensive to build, and that limits supply. And so I think I'm not necessarily like a land use expert, but I've read enough about it to where I think you can point to like indicators of housing price increases exceeding wage gains, and overall inflation, rental prices increases exceeding wage gains, people feeling distressed in general about the cost of housing, the housing supply growth relative to population growth and relative to historical housing supply growth. And I think it paints sort of like a very, at least to me, like a clear picture of the country as a whole, and specifically, and especially in certain markets, like housing supply has not kept up with demand for housing, and that's resulting in higher prices.
Well, let's talk about regionality. I mean, you must be seeing some variance across the country as far as, people paying by credit card versus by check, things like that. What are some of the things you notice about different areas that stand out to you?
So I think going back to the late payments, we actually do see a fairly significant state variance. It's not a question of like 86 to 90 being the range. Like, there's some on the low 80s, there's some in the low 90s when you get to state by state. I can send you some follow-up data if you want to look at the specific states offhand. I can't name the states, but that is very interesting. And it also sort of, it echoes in some of the other data benchmarks that I've seen of like, there is sort of fairly significant state by state variance in on-time rent payments. There's also obviously like, there's very, very significant rental average rent variance across not just states, but specific cities. And so, if you look at a San Francisco or a New York, versus, other even fairly substantial metro areas like a Phoenix or Los Angeles, you're going to see pretty significant differences in rental prices. And we certainly see that too. And so, if we see, a $5,000 a month rent or a $7,000 a month rent in a city like Las Vegas, it's not necessarily like it exists, it's there. But we'll look at it a little bit more closely and see, all right, like, is this legitimate? What's the property? Does it make sense? Whereas if we see a $5,000 rent in New York, it's like, all right, well, New York, like, it's probably legitimate and not fraudulent. And so those are the types of things that we look at. A lot of it is from the perspective of protecting our customers and protecting us from fraudulent users, because you'll see people come up and make up properties and put in a $15,000 rent payment and try to abuse dispute rules or whatnot to walk away with some free money.
What kind of data is not being collected? I think that, there's a lot of data that you have access to. What kind of data do you not have access to or see out there that you wish was being collected?
I think we have some insight to this, but not at a level that we would feel comfortable saying is indicative of the market. I think like high quality rental performance, like financial performance And there is some data out there in terms of cap rates and NOIs that is somewhat indicative and reliable, especially if you're aggregating information from the listing sites, although it's all self-reported, so you have to take it with a grain of salt. But when you get into like specific line items, like if I want to benchmark, my operating costs, and I want to do that by a specific category, like that I think is like super interesting. Like, what is the average utility bill? I mean, some of this stuff exists out there, but I think if I really wanted to know, all right, for, 3-bedroom rentals, 3-2 rentals in my market, like what should I be paying from an operating cost perspective, like line item by line item, and sort of like benchmark my P&L against something and see where there's potential cost optimization. I think that's where platforms like ours are going and will go over the next like 3 to 5 years, but get like automated insights that would help me operate my business beyond just rental prices, but the actual like, am I fully optimized from a cost perspective, and how can that benefit me as a real estate investor? It
would help to know like where should your insurance cost or utility cost per door be, and how does it compare to like, I get a notice from my gas company every month that says, here's your usage, here's your neighbor's usage, and you're way above or way below. Here's your usage last year. Having those kinds of KPIs could really be helpful.
No doubt.
Let's talk about Azibo. And do you consider yourself to be like a tech entrepreneur?
Yes.
What brought you to Azibo? Like why Azibo? Why this type of data collection and service that you're offering?
Talk about me is talk about the people before I got here. So the founding CEO, Chris Hsu, is our target customer. He built software that he, as a independent, self-managing real estate investor with a full-time job, wanted and needed so that he could better operate his business while having a full-time job, which is what most folks in this segment have. And so he built Azibo to serve them. He and I used to work together. So I used to work for him 18 years ago when we were both consultants. And so I got sort of reconnected with him through the former CEO of LoopNet, who invested in Azibo. And just through sort of like the network and the connections, I got introduced to the company, started working with the company, but then really enjoyed sort of the space ahead of us. There's this segment specifically, the independent real estate investor has historically been significantly underserved from a technology, from a financial services, and from a data perspective relative to the large institutional real estate investors and property managers. And I think that's been a disadvantage from their ability to compete, from their ability to better operate their businesses, and from the experience that they can give their renters. And the opportunity to do that, to provide a service that enabled the independent real estate investor who owns over half the rental housing stock in the United States. So by stint of that, they're providing housing to over half of the renters in the United States, to provide them with the ability to provide a better experience and get a better experience with renting, with financial services. Just seemed like an incredible way to spend my time.
Are you saying that the independent real estate investor, this on the smaller side, is providing 50% of the rental housing that's out there?
I think they own something like 65% of the housing units in the United States.
Wow. So it's not the large corporations, large apartment buildings. Huh?
Nope.
As we wrap it up, what's your favorite hack or app?
My favorite app, this is going to reveal more about my age that I've already revealed, is Feedly, which is an RSS reader and aggregates lots of RSS feeds from different blogs and publications out there, so I can pull all the content that I want to read easily in one place and keep track of what I've read and not read, and scan through it and filter it. So I guess I've just dated myself in multiple different ways, because I'm talking about RSS, I'm talking about reading instead of video or audio, but that is one app that I enjoy.
Say that again and spell it for us.
Feedly, Feedly.
How would people find out more about you, about Azibo, and or get a hold of you?
To find out more about Azibo, come to our website, azibo.com. You can also reach out to me directly. My email is Vikas, Vikas @Azibo.com. You can reach out to me. You can come to the website, reach out to our excellent team, check us out. Like I said, we're free, no software fees. So if you're interested in checking us out, you can also just sign up and get going.
And you host a podcast as well. What is that?
I do. It's the Hacking Real Estate podcast. I co-host that with Brandon Hall from Hall CPA, therealestatecpa.com. We interview real estate investors on a bi-weekly basis and just learn as much as we can. We've had folks who specialize in single family homes, multifamily homes, short-term rentals, long-term rentals, Section 8 rentals, housing for the disabled, a whole range of folks who give us a deep dive into specific sub segments of the market in a very interesting way.
Well, Vikas, thanks so much for coming on the show today and talking about data collection and how you're doing that through Azibo and some of the things that you're seeing right now in the rental world. Really interesting stuff. Thank you so much for having this conversation with us today.
Thank you, Brian. I had a lot of fun.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIG investor.com.